Nice trade on the last one of the day. It was good.
Yeah. Uh, just trying to just save everyone that last, like you know what happened? I'll be honest. Where is this guy KK man? I want to embarrass him a little bit because
I'll text him. Let me see what he says.
he always tells me like fake news. He's like markets closed. He had me believe in markets closed on Monday, and I'm just spitting out trade after trade because and then he's like, "Oh, I don't know, it was half closed." And I was like, "There's no half closed. It's literally the bond market that's closed." So, you know, I was really fighting on Friday because I thought Monday was going to be like a close day, so 3-day weekend. So I was like, okay, I need a couple of good trades at least, to finish off. So it didn't end out too bad, but a little bit too many trades, and we're going to talk about um, why too many trades aren't the best thing. I thought it was going to be closed Monday, but no, we have a regular week Monday. So hopefully next week it's going to be great. Next week we're going to have some really, really good plays. This week, as you saw, even with the QQQ, we made a great choice. It's just QQQ didn't really do much, right? So it kind of ended up popping right before, we got that big move continuation down because of the market. But hopefully next week we'll find some nice plays and they'll actually continue. Market's been in a little bit of a chop, but I think Friday we were just on the wrong side until toward the afternoon. We had two good Tesla trades in our live trading, right? One was like 70%, one was almost like 40%. That one was at the open, and then we had another great trade on Tesla toward the end, like 70%. And then we also had a couple of good market trades, so that's fine. All right, so let's get started here. Risk management for intermediate and advanced. This is basically going to be about for anybody that has trouble with swings. Simple, right? We're going to talk about all of the ifs, buts, whatever you want to know about swings and kind of the trading week throughout the swing, right? A lot of you guys don't have time to sit there, trade in the morning, first 30 minutes, hour, 2 hours, doesn't matter. You guys want to come in 5 minutes toward the end of the day, take a trade. Next morning, you want to be up big, down small, down big, doesn't matter. Just 5 minutes in, and you're in the trade. The next morning, whatever happens, stock goes up big, stock goes down big, doesn't matter. And the cool thing about the swings is your risk is already kind of in the picture, right? It's already there. So you will hopefully not lose more than 100% on the options. But if you do make good amount, you can make 200%, 300%, 400%. And we're going to talk about how to actively manage the swings, which is going to be like trailing stops, trailing profit stops. And we're going to talk about inactively trading the swings the way somehow I do it sometimes because you guys see me post like 200 300% profit and I'm holding majority of my positions. There's a lot more risk to that as well, but then you see the bigger profits and you guys will see like exactly what the two difference of the two strategies are. I always recommend actively managing because for me actively is always on my backhand where once I see that market has switched the direction or market has broken a certain support or resistance, I usually switch very quickly. And I can do that because I watch the market all day. Some of you guys can't do that. So if you cannot do that, then you should be. But basically, what you're trying to do is you're trying to always actively manage it and trying to come in every 30 minutes, take a trade, right? And then see what the trade is doing every 30 minutes or so, or an hour or so, right? That's kind of managing it actively. Inactively means that you're basically going in, you're already putting your stops and your targets in, and you already know either you're going to get a 200% gain, 300% gain, 500% gain, or you're going to get a 50% stop loss, break even stop loss, and basically that, right? So your profits are going to be much bigger. But the problem is a lot of trades might not go your way because not a lot of times you get the 500%, 1000%, right? So always stick with the active. But then if you really want to be inactive sometimes when you're watching the market all day, then you can be inactive. I know it sounds like crazy. Trade in an inactive way. All right, let's mute this guy for so that he can't unmute now. Okay. So guys, please. Um, and so now getting into it here. First thing first, right? Always important of consistent sizing. Always consistently size, no matter what. In your swing trading, there's two different ways of you can size, right? One, you can buy the same size of contracts, right? So on let's say swing one, you buy 100 contracts. Swing two, you buy 100 contracts. Swing three, you buy 100 contracts. But the problem becomes is because sometimes you're trading Amazon, sometimes you're trading Nvidia, sometimes you're trading SPY, zero DTEs. Sometimes you're trading 4-day to expiry. Sometimes you're trading something like Meta, which has $4 options. Sometimes you're trading like Tesla, where at the money or a little bit out of the money even are $2, $3. So how do you size between that? You cannot, right? You cannot have 100 contracts of a $1 option and then you buy the same kind of a trade on Meta, but you're spending basically 20,000 for the, you know what I mean? The 100 contracts because it's $2, right? So in order for it to kind of get rid of that whole kind of idea of like the same sizing with 100 contracts, you can't do that. You have to trade with the same money that you put into each trade. So what you do is if you have a $5,000 account, you only put in 500 into each trade, right? So 500 into Nvidia, 500 into Meta, right? So if you put in $500 into Nvidia options, or let's say 50 cents, you're going to buy 10 contracts. With Meta, now let's say the options are $1. Now you're just going to buy 5 contracts, right? But if you look back into it, it's the percentage. If you get 100% on Nvidia, you make 500. If you get 100% on Meta, you make 500. Simple. So this is why, right? As you can see, this is kind of like what my sizing is like, right? So I put in 10,000 into Netflix, AMD, Apple Cloud, and then, you see 10K return, 10K, 10K, 15K, 13K. And then if you lose 10K, 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 right? So, but still, you can win a lot and then lose small, right? Because this was an average week. If this week was 200%, 300%, 400%, right? Then the average of this trade would have been 23K, right? Average of this trade could have been 15K, right? The average of this trade could have been 40K, right? Even because sometimes you get 1,000%. The other day, SPY opened up 500%. We locked in 80%, right? So that was almost 5 times. So it was $50,000 with just $10,000 invested overnight. You just literally open your eyes and it's $50,000 sitting there. If you don't lock in 40,000, you're crazy because guess what? You're up big, and worst case scenario, they're going to try to just take all of that profit back from you. Why would you give back 40K to make maybe another 20K, 30K, right? It's not worth it. So you lock in 40K and then you let the 10K ride up to 100K, whatever, right? So that's kind of the whole idea. Always size with the same money, right? 500, 500, 500, 1,000, whatever your size is, same. It should be exactly the same. There should not be any difference between these swings, right? No matter how much money you put into each swing, right? And sometimes what happens is people go full size into, so like if they have a $2,000 account, they go full size into one swing, right? And what happens is that swing doesn't do as good and they make maybe 10%, 20%. And then what happens is there's a swing that literally happens the same night because they can't get into because they're stuck in the other swing. That one ends up doing 300%. Now they're sad or upset. And then they do the same mistake over and over again, trying to get a different result. Instead, where, okay, you would have put in $1,000 into one, put another thousand into another one, right? And what happens is, yes, on the first one you made 300, on the second one you made 2,000, right? In equivalent, you made 2,300. If you would have chose the second one instead of the first one, yes, you would have made maybe $1,000 more, right? You would have made 3,000, 4,000 if you would have just traded that. But um, the whole idea of it is, one second. And so let's talking about this because now I think everybody kind of understands that, you're supposed to just consistently size and then the percentage return is what you get, right? So that was a swing trading. And now we're going to talk just a little bit about day trading. And I'm going to explain to you why those are two different things and why trading size is a little bit different on swinging and day trading. Okay. So it really goes like this. If you trade the same amount of money on, let's say, for instance, Tesla on a day trade, it really doesn't work. Why? So let me explain to you. If you, for instance, put in, let's say, $1,000 on Monday into Tesla, okay, options are $7. Okay. Now you basically put in $1,000 into this and you're able to only buy one contract, right? For the sake of this, we're going to say 10,000. So what we're going to do is we're going to be able to buy almost, how many contracts would you be able to buy? 10 contracts, right? Yeah. 10, around 10 to 13 contracts. Yeah. So, but then let's say you're putting in the same 1,000, right? And then on Monday, you're looking for $1, right? So on Tesla, you're trying to make $1 from $7 to go up to $8, right? Because $5 of this option is premium, right? That's what you call time value, right? Because look, on Friday, it's $1, right? $1.80 is where these options end up. So these being $7, that means almost $5 of these are just premium. That's time, right? That's going to die Monday, $1, Tuesday, another dollar, Wednesday, another dollar. So if you put in, let's say 10,000 into here, you buy 13 contracts, you make $1, you make 1,300. On Tuesday, you buy how many contracts? You'd be able to buy nearly 20 contracts. So now you're trading with about 18 contracts. And now if you make $1, you make 1,800, right? And then on Wednesday, you're able to buy 25 contracts, right? Now we've been looking at the good side. We've been making money. We've been making $1. What if you lose $1? You lose now 2,500. You made 1,300, you made 1,800, and now you gave back 70 or 80% of the profits. Where if this is kind of the same idea. Like if you trade the $3 contract, you'd be able to buy 30 contracts now. If you make $1, you make 3,000, right? Or you lose 3,000, but on Monday you only made 1,300. How is that like consistent? How will you be ever consistent trader if you do or follow this strategy on day trading? It won't work, right? So two different ways of trading. You have to, with day trading, you always stick to the contract size because you're going to trade the similar ticker every single day the same way. So if you're trading, let's say a $7 option, you're buying 100 contracts, you're trading, let's say, basically, and you're trying to make $1, that means you'll make 10,000 if you make that $1, right? With the 100 contracts. Okay. Now, if you're trading 100 contracts with this $6 option and you're trying to still make $1, right? Because remember, the reason why these options are dying is because you're losing time value. The stock is still going to have the same range. Stock is still going to move $8 to $10 every day. And all you're trying to do is you're trying to make $2 on Tesla, up or down, right? On the stock, and then maybe $1 on the option. So even if the option moves $1, it's going to continue moving $1 at least Monday, Tuesday, Wednesday, Thursday. It doesn't matter what the price of the option is. So on Monday, you're buying 100 contracts at $7, you're making $1, you make 10,000. Tuesday, let's say you make $1, you make 10,000. Wednesday, you lose $1, you lose 10,000, right? Okay, Tuesday's profits are gone. Monday, you still have 10,000. Wednesday, you make another 10,000. Friday, you lose another 10,000. So look, these 4 days canceled out, you still end up with $10,000 profit. If you would have done the same thing with the way we talked about on swings, where you're sizing with money, you would have blown up your account, right? Because on Friday you have a lot of money sitting there, right? You're buying 3 to 4 times the size, and what's going to happen is this: you could be, up basically 20,000 here till Thursday. On Friday, and one bad trade, and you could literally give all of that back very quickly in just one trade, right? So this is what I basically I'm trying to explain here for day trading. I just realized there's a little bit of error there, but throughout the week, play the same contract size for day trading. Day trading, stick with the contract size. Swing trading, money, how much money you put into the trade. Okay, simple as that. So very, very easy to understand. Any questions, guys? Really quickly in the chat, because we're gonna move through this. Okay. So going a little bit more deeply into this. Okay. Now, another aspect to understand in you know in swing trading is this, right? Remember, when we're trading not the same day expiry, okay, this only applies when you're not trading SPY or QQQ. If you're trading QQQ and SPY on the swings, then this doesn't apply because they're consistent throughout the day, because it's literally like you're buying the next day expiry usually, because if you're trading SPY or QQQ, you're buying the next day expiry. They're kind of linear, right? If you're buying, let's say, Tesla's options on a Tuesday and you're trying to swing it, that's when this method applies, right? Look, on Monday, option prices are $7. So for instance, if we take a swing on Monday and let's say Tesla gives us a $2.50 move on a Monday, right? Okay. That gives you about 35% on the money that you put in. Let's say you bought 100 contracts, right? And you put in, or not even 100, let's say you bought 10 contracts, right? For $7,000, right? You bought 10,000 at $7, right? You put in about $7,000 into this trade. You make 35%, right? And you make about basically $2,100, okay, on that 7,000. Great. Now, look at the difference. I'm going to jump straight to Friday because this is where you'll see the biggest of difference. If you get the same $2.50 move on a Friday on that $1.80 option contract, you get 140%. Okay. So this is why we also say that on a Tuesday, on a Wednesday, if you see 20%, 30% on an option, and this is usually why, if you ever seen like for swings, we never play Monday, Tuesday, Wednesday. Sometimes we get kind of FOMOed into stuff, and that's every trader, and that's how trading works. If you don't have that, you're literally a bot in your computer, and you're not going to be like, basically like it's not real. I'm so sorry. They're lying to you. There's some sort of a lie there. Everybody loses money in trading. Everybody has to lose money because that's how the market works, right? Because if you always won, right, there is no reason for you to ever even like then you could make your money in other ways much, much easier. If you're that much of a computer, you could literally be a scientist and you'll be literally like a trillionaire, not even like crazier, right? But you have to lose money because we all have emotions. We always want more. We always want less. Of the losses and so on. But that's human psychology. But look, on Monday, you usually get 35% on the same move. Look, $2.50 move on Tesla, $2.50 move on Tuesday, you get about 40%. On Wednesday, you get 55%. On Thursday, that same 35% just turns into much, much more, right? So this is what we mean. That's why we take trades on Wednesday, because instead of getting 35%, we get 50%. If that same move would have happened on Friday, we would have gotten 150%, right? So this is why we try to stick with Wednesday, Thursday, and Friday, so that if we take a trade on Wednesday night and then the next morning you get even a slight good move, right? Where you get $4 move, $5 move, you get 100, 200%. Your money goes much longer way. And this is why you don't blindly just go follow chat rooms that have no idea what they're talking about. And they're just like sheeps giving you signals. Like signals, yeah, I understand, but there's math behind it. You have to be an educated trader to be able to make money and make your money go the longest route, right? You could keep on trading with $1,000 on Monday and you could keep making, $300 every day, right? Amazing. But if I know that I can get the same type of a trade on a Wednesday, I could save your cash account to take a trade on a Wednesday and make 55%, or on a Thursday and make you $800 instead of that $300, that's when you make money, right? Or on a Friday when I can make 140%. And what's the worst case scenario if I lose on Friday? What happens? I lose 100%. But on a Friday, I could have made 140%. I could have made 200%. I could have made 300%. Right. So I could have made 3 times my money that I could have lost on Monday. If you let your options go to zero, guess what, buddy? You lost 100% of your money. And look, you were only thinking of making 30% on that same trade. Where on that same trade on a Friday, $2.50 gives you 140%, right? And your money goes longer way. So there's a lot of trading has a lot of like details into it, which people like really just kind of seem to go like lose it over. And this is why I always talk about build your own strategy. I don't know what your trading account is. I don't know how you trade. I don't know what your timing is. I don't know what your schedule is. Sit down, right? Go on Excel, build it out. Be like, okay, I have $1,000. I'm gonna trade Wednesday, Thursday, Friday. My stop loss is gonna be, I'm gonna put in $300 into each trade, right? So I'm gonna buy 3 contracts because usually as you see, we're very linear too. We always give out alerts for options that are near $1, right? So we try to keep it simple as possible for you guys so that even on a Wednesday, you're buying the same amount of size. And then on Friday, you're buying the same amount of size. But, you know, if we always let you guys know that, okay, well, if the option's much cheaper, you want to, kind of lower your, or, higher your size just a little bit. And then, of course, on like SPY and QQQ, because they're the next day expiry, usually get super cheap options, and you could easily like make 100%, 50%, right? So kind of build your own strategy, right? Look at your account, like how you're gonna trade, what you're gonna trade. Are you gonna be a day trader? Are you what are you trying to do with it? Right? Basically is what I'm saying. So build your own strategy according to the signals, right? I'm not saying the signals are bad. And if you want to go do your own thing, amazing, right? But I promise you, you lose more money when you don't work with the people that already know what they're doing. It doesn't matter if it's us. There's a lot of great people out there that are trying to give you signals, teach you, and all of that. And it's a business, makes sense. They're making money, but then on top of it, you guys are making money. It's simple as that. Nobody says this out loud, but it's simple as that. If you can't spend money to make money, I don't know who you are and I don't know what you're talking about. You have no idea how world works. Simple, right? If you can't even create a resume, you need to pay to create a resume if you didn't know, right? You can't create a good resume, you're not going to get a good job. Simple. If they can do that in that world, then I'm pretty sure in trading you could pay a little bit to make a lot of money. Simple. So doesn't matter who it is, find somebody, learn, make money. Simple. Try to do this on your own. You're going to lose tens and thousands of dollars. And then you're going to come back and you're going to do the same thing. Because I did that, right? For 3 years, I lost money. So, active and inactive, right? 2 different types of tradings now. We're still on the swings. Remember, this was only to explain to you that, we'll do another webinar on like day trading, right? At some point, but this is mostly on swings, just to kind of show you guys the consistent sizing aspect of it. But still, we're on the swings and we're going to stay on the swings throughout, right? So for the swings, there's 2 different types of trading: active and inactive. What does this mean? Active, what means is you have small wins, right? And sometimes, right, you will have big wins, but majority of the time, your losses and your wins are going to be both, right? Like not too big, not too small. But because the way we, kind of make our chat room kind of work, where on Fridays and Thursdays we trade, and we usually, like, worst case scenario, even for a small amount of move, you'll get 80% to 100%, right? Even on the active side, you'll still make good money, if that makes sense, right? Like what I'm trying to say, if you were to trade Monday through a Friday, yes, on the active side, you'll have smaller wins and you'll have smaller losses. But because we trade Wednesday, Thursday, Friday for the swings, we tend to get bigger wins, smaller losses in the active side. And then on the inactive side, sometimes you just get those huge wins. And then you have those huge losses as well, which is 50% to 100%, right? This is where Once a stock crosses 50%, you put your stop loss at 50%. Right? If it crosses 100%, you move your stop, and we're going to talk all about this. But usually, this is kind of a bad representation of how we trade. But I want you guys to see what the active side brings in and what the inactive side brings in. And the whole point of the swings, guys, is set it and forget it. Right? Literally, you get into a trade and you put your targets in and you walk away. Simple. That's why it's called the swing, right? If you want to actively manage it, that basically means is that okay, before we get into that, one thing I want you guys to do, go to the Discord, right? Turn on notifications. Because some of you guys don't even get the signals and you guys are like, oh, your signals are delayed. Why? Well, because signals are delayed because you guys don't have the notifications on. And you guys don't have the notifications on for that certain chat room at that given point. And sometimes Discord is slow as well. So you need to actively, like I said, every 30 minutes, 15 minutes, check the Discord, right? This is why I recommend you guys being active in the Discord. You guys ask me questions, I'll stay active. You guys will know what is going on with the play. If you guys never talk to me, I don't have to do shit. I could just literally keep trading, keep putting in the signals, and just keep doing my thing. If you ask me, oh, what's the target, Manny? What's this? I'll answer. That way, you guys will know. That way, hundreds of other people will know. Simple. That's why you need to be active if you can be. If you can't be, okay, that's fine. Nobody's forcing anybody, but it's just the reality of the things. You get what you put out. Simple, right? So, same kind of idea, right? If you're starting with like $100,000 account, right? Because of this, 1 second. I think these two slides are a little bit more. Sorry. Yeah, that's kind of about the journey of a trader, but we'll get into that a little bit later. But um, you know, one contract to two contract size for the active system, right? We were talking about how to trade actively and inactively, and we're going to kind of go deeper into this, right? So to trade actively, okay, one thing you are going to do is this. You're going to put your stop loss at 50% and your target's going to be anywhere near 100% on a Wednesday. And then you follow this chart, right? Like you should take a screenshot of this. If you guys haven't, I'll give you guys a second. Take a screenshot of this slide and you guys should follow this slide, right? Why? Because on a Thursday, if you get like an 80%, that should mean that that's like a really good move on a Thursday, right? If you get 100% on a Friday, right, that means that it's a same move as you would get on a Wednesday for 50%, right? And in that way, this is why where if you're trading one contract, you know that okay, my stop loss is 50%, right? In the active system, I should be taking some profit at 100% on Friday, at 80% on a Thursday, around 50% on a Wednesday, right? It's a little bit more detailed, but you gotta really listen. We'll upload this recording so you guys can kind of rewatch it and kind of understand my psychology behind it. But the idea of it is for actively managing it, you just put your stop loss at 50%, you lose $50 to $70 max. And then your target is going to be $100. And then anything above that, right? So what you do is like, you basically put your stop, right? You put a profit target at $100. And what you do is after it crosses the 100 or crosses 80%, you put your stop at 80%, right? And then you let it run. Okay. To the next level, which is going to be maybe 140, 150, 180, right? It works always better when you have more contracts. And this is why we recommend like 1 to 2 to 3 contracts at least, right? Like 3 contracts should be like what you should kind of mess around with. Nothing with one contract, because one contract really limits you, right? Because we're on the business of risk management, right? We're trying to take as much risk off as possible. So when the stock goes up 50% and you take one contract off, that $50 is gonna protect your other 2 contracts. So even if the stock comes down, let's say 20 cents below where you entered, you're still break even, right? So it kind of helps you take off risk if you trade 2 to 3 contracts. So This is why it's always recommended to trade bigger size than smaller size, because it'll go a long way, right? If you keep trading one contract, you're going to see inconsistent results because, well, you're human. You're going to see 100%. You're not going to take it. It's going to go back down, and you're not going to stop out because you're like, holy shit, even if I get 30% now, I'll be happy, but it's never going to go to 30%. It's going to go to 50% negative, and you're not going to take it off because, well, you're going to be like, holy shit, I was up 100%. Now I'm only down $50. Let me just give it another 50 and see if it comes back. It's never going to come back because that's how they design options. Simple. So instead of going through all of that BS, why not take one contract off, right, at 150 or $100, and then you make 100, and then the other, $100, even if it goes to zero, you made 100. You made money that day. Yes, you didn't make 500, but you made $100. You come back tomorrow. Tomorrow you're gonna get lucky. SPY's gonna gap up 500%, and you're gonna make 5 times your money overnight. Simple. That's literally how trading works. You wait for the lucky days to happen. You do what it needs to be done every single day, but you wait for the lucky days to happen. Right? Simple as that. So as long as you can manage this bad side of it, you're good. So actively, you're moving up your stop as it crosses 50%, 100%, 150%, 200%. You're basically moving your stop to 50% in profit target. So meaning that's a profit stop now, right? Once it gets to, let's say you go to 100% on the stock, I'm so sorry, on the option, you move your stop to 50% at profit target, right? So it's a profit stop. Now, okay, now it goes to 300%. You move your stop to 200%. Worst case scenario, you make 200%. Best case scenario, you get 500%. Or you could take it off at 300%, right? So this is kind of the active system. And now this is the 1 to 2 contract size of inactive system. Inactive system goes a little bit more crazy because this one basically with one contract size works a little bit better because if you're trading one contract, you should only look at the inactive because it works a little bit better with that, right? Because you're not kind of taking profit as you go, and you know, uh, and you'll see what I mean. Like literally, so your stop loss is 100%, either, or you're going to get 200 to 300%, right? So you're basically getting at least 1 to 2 risks to reward. Simple as that, right? You're not taking much profit at 100%. You are if we alerted in the chat and we're like, okay, take some profit or this and that. But other than that, you're just kind of letting this ride to 300%, 400%. So like, for instance, even if that whole week, let's say you had a couple of trades where, and remember also, mind you, look what it says down here. Always move your stop to break even after any profit point, which means if you're up over 30% on an option, automatically, if you go from $1 to 130, your profit stop should be at break even. Worst case scenario in that situation should be you make no money that day, but you don't lose your money. Simple, right? And that's after, first of all, focusing on this, and then we're moving on to this. Then, if it goes over 30%, you put your stop loss at 100, basically break even. Then you let it ride to 300%, 400%, wherever it's going to go, right? And then wherever you feel good after 200%, you take it off because you were risking to lose 100%. So you're basically looking to make maybe 150 to 200%, right? And then if it's a target that we call out in pre-market, and this is why pre-market live is so important. If you call out a target, we say 124 on NVIDIA, guess where NVIDIA rejects? 124. It goes up 300%, 124 hits, boom, drops down. Those options basically end up at 50 cents after from $3. It's literally simple as that. Support, resistance, it's going to hit resistance, it's going to go back down to support. Your options are going to go to zero. So, basically the inactive for one contract is not bad. But if you're trading more than 2 or 3 contracts, this is where it becomes a little bit more even, kind of easier to trade inactive because look, you put your stop at 50%, right? Or even 100%, doesn't matter. If you go above 100%, you just put your stop at basically 50% or break even, and then you take one contract off above 100%, and then you let the other contract go to 300, 400, 500%, so that, guess what? That other 50% of the position is going to pay you, right? 2 times, 3 times of what you're, basically already making on the first one, right? So it's kind of the idea of like a couple of different ways. And this is where you need to sit down yourself. I know this might sound very confusing to some of you guys because nobody has ever talked to you guys about this because uh, probably because people don't tend to, kind of educate people when they're doing, signals and all of that because, they're not proper traders. This is how I feel. I feel like there's a business in this thing where like you just give out signals and people just blindly follow. No, you need to sit down, build a strategy around your account and your portfolio on how you want to take these trades. Okay. If you are not doing that, then you're not a profitable business. How would you expect me to invest in you if you have no idea where your targets are, where your stop losses are, what you're doing? Like imagine if from a third party perspective, somebody came into your trading business and they were like, okay, tell me what you're doing on a daily basis. What if you told them that, okay, I just follow that company, whatever that company does, it's good. You think that guy will ever invest? Like, you think I'll ever invest in you? Ever? If you're just following that other company blind. No, some stuff might work for that company. Yes, do that. Right? That's how companies are built. How do you think Pepsi was probably made? Or I don't know who was founded first. Coke was made first. Somebody was like, I could make it better. 90% of the same thing, boom, a whole new brand. Yes, everybody drives off of that, but the 10% has to be different because some stuff might work for Coke, some stuff might not work for Pepsi, So it's kind of the same idea. You have to use two different things and you have to kind of sit there. You have to be like, okay, does this work for my account? If Manny's trading a $10,000 account and he's going into each trade with the $10,000, is that going to work for my $500 account? Maybe this is not going to work for me. So I'm going to do the active approach because it's going to work for me a little bit better, right? That's kind of the idea of this. So building a plan to eliminate emotion, simple. This is literally what we're talking about. I don't want you guys to be super happy when a play goes really good and you're 100, like imagine you're 100% into this one play, super happy. You don't take profit, boom, you hate yourself, right? You're like, holy shit, why did I do this? You're going through this freaking phase of wanting to, like hit something, this and that, and then you're super happy again. And then guess what? You think this ends here? No, it doesn't, because guess what? It starts again. Because you're trading every single day. You're not trading every, a year or so. It literally happens every single day. And so as an example, I'm going to show you guys a little bit of examples of throughout the week what the trades would look like. So this hopefully will explain a little bit better, right, of how kind of this active and the inactive systems kind of work. Okay, so as an example, crowd, for instance, right? You put in $10,000 into this trade, you lose 50%, you go negative 5,000. This is kind of like my trading style, how I trade, okay? Then you have another trade, SPY, where you put in 10,000, you hit the stop loss again, 50%. Now, this is the active one. Remember, we talked about how you're putting your stop loss at 50%, you're losing 50% to 70%, right? And you're just waiting for the next trade. Okay, you lose 5,000 again. And then you put in 10,000 and then you hit a target of about, 100%, and then you take off 50 contracts there. So that means you locked in 50 contracts, right? And mind you, this is basically saying you're locking in 5,000. Then the other 25 contracts pay you another 200%. And then the other 300% on the other 25 contracts. So you basically make about $17,500 in profit. Okay. With $10,000, right? Because you're actively just taking profit as the stock is going up and you're eliminating your big portion of your money here, right? And now look, 5,000, right? And I'm so sorry. I gotta fix some of these errors because as I was really trying to rush this and make this, but the profit was 17,000, right, on the week. Okay. Now, look, that 17,000 out of that 10,000, now you made basically 7,500. That's your profit. 7,500 is your profit. This is with the active approach. With $10,000, you made 70%. With $100,000, you made $70,000. With $1,000,000, you made $700,000. That's how you have to think. With $1,000, yes, you made $700, right? I know it doesn't sound much when you look at a 700,000, but like it's the same idea. What's stopping you from trading $1,000,000 account and making 700,000? Emotions, mentality. How do you eliminate emotions? By having a set of rules which make trading indeed boring. Simple. If trading is a boring chore to you, you would not care about your emotion. I promise you. Have you guys ever done a chore every single day and you're like, holy shit, I don't feel anything? You're driving in your car, you're about to go get groceries, and you're just literally staring into the road. And because you're driving every single day, you don't even know if you're on the road or not. And then like 2 minutes later, you're like, holy shit, where was I? Like, you know what I mean? Like, has that ever happened? Where you guys even like, you know what I mean? You get like kind of you go away from like even like you're just driving without any like, like emotions because you've been doing that for so long that it's just like secondhand to you. It's so easy to just drive and it's kind of the same idea. You're just basically making trading super boring, following rules, setting a plan that it just becomes like a simple thing that you do every day. That's it. Right? There's no emotions of how much money you're going to make, how much you're going to lose. This, no, it's just literally plan, boom, boom, boom. Plan worked, plan didn't work, plan worked, plan didn't work. If you do that 1,000 times, plan worked, plan didn't work, plan worked, plan didn't work, it doesn't matter to you now. Plan worked, okay, whatever. Plan doesn't work, okay, whatever. I have tomorrow. Plan works, okay, worked. It's simple. And now, look how this changes the game though. Now, if you do one extra trade, right? Look, you lose 5,000, you lose 5,000, make 17,000, you made 7,500 profit. And then you hit another good trade on that same week, right? You had two losers. This means your win rate was 30%. Isn't that crazy? You lost two trades, you won one trade, and you made 7,500. Now your win rate is 50-50, right? 50%. And if you guys want, go back into our swings and see what our win rate is. And I promise you it's way over 80%, right? Crazy. But look, even with a 50% win rate, you lose 10,000, you make what? 27,000 by just having two good trades, right? And this is 1 week. You can really genuinely, like, if you actually put your mind to it, you learn, you could do this. Simple, right? And don't mind this. This was from previous, time we did this webinar. Yeah, but the profit was 27,500 just by having one more good trade. So what I mean by that, sometimes when I say you need to get lucky, that's that luck. Sometimes you're gonna have 30% win rate. Okay, you break even on the week. Who cares? You break even. It is what it is. You come back the next week, boom, you have two good trades, right? And sometimes you'll have these two good trades right out the gate, right? You don't even need to trade then, right? And so the idea becomes is that you're basically waiting to luck to strike after you just follow the plan where you're minimizing risk. Simple. Minimize risk is your plan every single day. Boom, a lucky day comes in, blesses you with extra $17,000. That's literally how I trade. I wait for the luck to happen. As over time, I've spent 9 years trading. I kind of know a thing or two about what stock's going to go up, what stock's going to go down, or you just have that feeling from the inside because it's just that's how it works. If you spend so much time on something, you're going to be right more than you're wrong. So if you could do that, well, then you're lucky every day. Simple. You know what I mean? And then basically kind of the same idea. Uh Inactive week, you're basically putting in 100% stop loss where either your stop loss is going to go to zero or you're going to make literally 300% or higher, right? And that means that, same thing, 10,000, 10,000, right? You lose and then you make 15,000 or 16,000 on the inactive. So you're going to get better results in the inactive 100%. But then guess what? You're going to be wrong much more times. You get what I'm saying? Like your win rate's going to drop by 50% because if it's 80% win rate, your win rate's going to drop by 40%. And that, okay, but that shouldn't mean anything because you're still doing the right things. Because if you're taking profit and you're not being quick with it, right, on certain days, and certain days you're just waiting, for the stock to go up or down, like you got to set the plan. This is what I mean. Sit down, build a plan. What are you going to do when this happens? What are you going to do when this happens? What are you going to do when this happens? Follow that plan for a month and then see if it works. If you're making money, amazing. That's it. Simple as that. So look, we made 15,000, right? And now if you have another lucky trade, boom, now you made 36 plus 15, that's nearly almost 50,000, right? Same amount of money you're putting into each trade, right? But now you're just waiting for the target to be much bigger, right? And look, this webinar or this slides that I was trying to correct for, and I messed up a little bit, and I apologize for you guys, but look, we've been doing this for over a year now. Look, this slides are like a couple of months back, and look, we were still getting these crazy returns, 300%, 500%, right? Because that's how options work. They pay you really quickly, 200, 300% when they keep paying you. When they pay you, they'll keep paying you. Simple as that. When you keep because the problem becomes is, look, if you're at 250% in profit on these options, right? Why would they be like, okay, all of the people that have taken 70 contracts off at to basically, let's say 300%, right? They've already sized down, right? Now, why would I pay these people that are losing? Why would I let them come to break even? Is it easier for me to have them go to break even or pay this smaller size another 200%? What's more likely? What's more better for me as a market maker? Think about it. Just brain, like, think about it. You pay these guys 10,000, 10,000, you pay them 20,000, or, right? Do you pay this 30 contracts 6,000? What makes better sense? Because remember, you are making a bet against the market maker when you're buying an option. Somebody's selling you that option. I hope you know that. If you guys didn't know that, anytime you buy an option, it's not just that the options are there. Somebody's market making those options. Somebody's taking the risk to be able to hold that option at a certain price and is like, okay, you want to buy this at $1? I'll give it to you for $1. Right? Now, it's on that guy. Either he's going to make money from you or he's going to lose money from you. So if they can do that with the more people, so this is how the algorithm works. As simple as that. When they start paying you, when they pay you 100%, 200%, usually 70% of the time, they'll continue that till 400%, 500%. And that's literally how you basically kind of get better at the system. So take a picture of this, right? This is going to be very important for you guys. Trading amendments. Follow these rules. These 8 rules are always going to help you make money in the market. Simple. Always move your stop to break even after being in profit, right? At any point, wherever that's going to be for you. Remember, sit down, build that plan according to your account. 30% is going to be my stop, regardless, right? Or if you're going to follow the same stops as me, Nick, do that, but always do the same thing. Don't be like, today, I just, even if you're right, even if you are right, because I hope you know, yes, some days you're gonna be like, oh, these guys are crazy for letting these options go, from 30 cents to zero. I'm just gonna close these options. Good. That's fine. You saved $3,000 with a $10,000 account. 2 weeks from now, me and Nick still hold, right? I was risking $3,000. Yes, back then. And then I risked the 3,000 again. Okay. Well, now that option comes back and it pays me 150% in profit. Well, now think about it. for that $3,000 that you closed out, right? I made 20,000 almost, right? I made the loss and money on top of it. Then you're gonna hate yourself. You're gonna be like, "What the fuck? Why am I doing this?" So don't like even let that be. Have a plan that you're gonna follow regardless. Who cares what the market does? Who cares? Who cares? Somebody makes 500%. Who cares if somebody makes 700%? Who cares? Do what the plan's gonna tell you. Make trading boring, simple. So always stop your, stop profit at 100%, 50%. Move it up, right, to 100% if it goes above 100%. This is moving your stop to basically a stop profit, right? So move your stop profit to 50% in profit, 100% in profit. If it's above 100%, no matter what, there shouldn't be a question asked for you to move your stop to 80% or to 100%. Because worst case scenario, if you were risking 50%, or even if you were risking 100%, at least your stop should be at break even, 80% or 100%. One of those things. If there the QQQ trade that we happened on the swings, like literally yesterday. If any of you guys lost money, I need you to sit down and think about it. Just think about it. Why did you let that 80-cent option, right? Okay, even if you did lose money, you put your stop, let's say 20 cents below. Amazing. Okay, 80 cents, you let it go to 60 cents. That's okay. That 20 cents at some point could make you $3. I understand that. That's fine. But if you let those options go to zero, you're insane. You have no plan. You have no strategy. You have no business. You don't know how to do business in the market, right? That's what I mean. So let that kind of plan build and then follow that plan like just blindly, right? So always move your stop up for any swings, right? Break your account into 3 smaller accounts and always take small profit. Like, and just, literally simple as that. If you have $10,000, $2,000, $3,000 into each trade, right? Or each week, that's how you should be looking at it. Yeah. And so yeah, no time for stupid. Yeah, yeah. So that's kind of the idea, man. And all it comes down to is us. I've done that so many times, guys. I promise you. I'm just looking out for you guys. It's the same thing as like giving tough love. If I've done the same mistake 100 times, right? And I'm kind of like looking at myself and I'm like, why did I do all of this stupid shit? Like, would I want somebody that's that I care for or I look out for to do the same thing that if I know fire is gonna burn me? Yes, I understand you have to learn your lesson 100%. Would I actually fucking shove you into a volcano and be like, learn it the hardest way possible, come out with third-degree burns? Or would I be like, okay, look, touch this little hot surface. Well, look how it feels. Or, how bad would it be if it was 10 times hotter? Same lesson, same, like it's just one is very much, like where you don't come out with third-degree burns, and one just, you're just kind of getting the idea that, okay, well, you're making some progress. That's it. So for swings, small account, like 10% of your account is what I usually end up recommending into each trade. So for instance, if you're taking one trade on SPY, $500 out of a $5,000 account, $100 out of a $10,000 account. If you have a $10,000 account, 1,000. Yes, you're gonna now. If you guys want to ask me what is my size account or what's Nick's account, well, my account is sometimes 20,000, 30,000 when we're taking the swings. Nick's account is similar, right? 20, 30,000. And do we go 100% of our account YOLO into a play? 100%. But remember, we've been doing this for years and we have much more money. So every time we do make money, though, like you guys see all of those profits, they get transferred over to the bank, right? They don't stay in the account. We're not compounding our account. You don't see us making 10,000 one week and you're seeing us make 500,000 the next week, right? COVID was crazy where we did compound a lot. At least for me, it was crazy. 100K days, 200K days. But now it's like much more reserved, but that's how trading works, right? You got to do the same thing over and over again. So same thing, whatever you're risking should be consistent. For day trades, right? Risk only 5% of your account. And that's amazing. And you know why that is different from a swing, right? Instead of 10% to 5%, because you're trading a bigger account, right? If you're day trading, you're not trading with a small account. If you're trading Tesla options every single day, you're trading Monday, Tuesday, Wednesday, Thursday. You're paying extra premium on Monday. You're paying, a little bit less premium on Tuesday, a little bit less on Wednesday, but you should be trading Monday. You can't just come in and trade every Friday. You can do that, right? But then you can risk 10% of your account. Who cares? But if you're trading, let's say a $10,000 account and you're buying 7 contracts, you should only be risking 5% of your account. Risk, meaning like stop out, right? No more than that. So if you have a $10,000 account, you should not be risking more than $500 every single day when you're day trading, right? Risk 500, make 1,000 or 500. Simple. Trading is a long-term game, right? Withdraw that money, invest it into something different. Promise you. That always going to go a long, long way. Put it into SPY, put it into real estate, put it into wherever you want to put it into. Do not think of trading as today, tomorrow, and that's it. Hustle as hard as possible, right? Trading is a hustle. Literally, I'm telling you, day trading is a hustle. The way that we trade swings and all of that, you can kind of take this into the long term, because of the worst case scenario, you lose 100% and then you make 200, 300%. That you could do with a 100K account. You could do with $1 million account where worst case scenario, you lose $1 million. Best case scenario, you make $3 million. Simple. Day trading, however, messes with you mentally. As what we use some messed up words there, but mentally, it challenges you. It shouldn't be something that you're trying to be the best at, because to be the best at day trading, from believe me, I've tried very, very difficult. I've realized that trying to be the best at day trading is going to require so much capital, so much energy, that you're much better off trying to be semi good at other stuff for long term, which are going to give you a better mental health, better, returns, and better everything. So kind of always look at this as a long-term game of just kind of hustling money from day trading quickly, like a 500 here, 500 there. After a month, you have a $10,000, boom, goes into real estate, goes into SPY, goes into whatever long-term. Do not touch that money ever, right? So always have a plan, always follow the plan. Simple, never FOMO chase, right? You will have more opportunities tomorrow, right? We've been trading for years now, almost 9 years. And then if I really look back, even as crazy as it sounds, even now, like look what I did Friday. Isn't that crazy? Because I was like, Monday's gonna be market's gonna be closed because I thought market was gonna be closed. I ended up taking way too many trades because I felt FOMO, chase, missing out, right? It happens. And I'm not gonna lie to you guys and say that it changes over time. No, it changes over time if you change. I am more so kind of having fun with trading, and I don't change that aspect of it, which is kind of crazy, but it's just I feel like it teaches me more and more lessons about the market and makes me better at the market. And that's why I let it slide. But if I needed to cut that off, it's gonna take me a month or so, and I wouldn't care. I would not take more than 2 trades. Right. And remember to always walk away from the screen. When you do have one bad trade, two bad trade, three bad trade. Look, Nick yesterday walked away from his screen after 2 bad trade, right? He lost $4,000, $5,000. He comes back after 3 hours or so, takes my trade and makes his money back. Isn't that great? Where if he would have taken another trade, because he's already fighting with the emotions from the first trades, his next trade has much lower, even if it's an 80% win rate that he has had in the past on that given day, on that given time, because he's lost a lot of money and he's trying to make that $4,000, $5,000 back, he's gonna do something stupid. The chances of him doing something stupid would go up. So that way, right? Avoid kind of doing that. Just walk away a little bit, a couple of minutes, walk away, come back. Right. So simple. So follow these rules. Very, very important. And, this is basically kind of the amendments of trading. If you follow these things, I promise you, you'll make money in the trading. And this is kind of the day trading thing, but that's all we got basically for today, guys. And the idea of you guys should put a little bit more time into yourself in trading as well, right? I know a lot of you guys are, amazing that, some of you guys are joining. Usually on Thursday, we did a webinar last week. We had about 40, 50 people join. And today we have 25 people, right? Which was the max, which is crazy if you think about it, right? A lot of people are going to see the video recordings and this and that because everybody's busy. But if you're taking the time, right? Think about it. If you're taking the time on the weekends to do this, you guys are already moving in the right step. So spend another hour or so and build your plan, right? And if you build your plan, you will, have much, much better chance of making more money. So let's do a little bit of questions. If you guys want to go over some of the questions about, trading. Question big. Okay. One of the best and most. Thank you. Thank you. Yeah, man. I've been doing this for a little bit. Delta theta and all of that, Prince. The problem is, bro, I'll be honest with you, right? This is where, right? If I talk about delta theta, it's gonna take 5 hours. And this is why we have the mentorship program. If you guys ever want to learn, for any of you guys, if you guys are thinking about it, I promise you, not from me, not from anybody. It doesn't matter who you're learning from. You can learn a lot of the stuff from YouTube for free, right? It might just take you a little bit longer. Simple, right? Learn it from somebody. I promise you, it's gonna go much longer way than you just losing and blowing up accounts. And remember, a lot of the trading, the reason why I recommend getting a mentor in trading is simple as this, because sometimes if you ask some of the people that are, in the mentorship, like for instance, like even like Chris, right? Chris has this problem too. He's literally like me. He has this mentality of you can ask him, right? Of gambling, right? Sometimes. And the idea is when you're in that mindset, you don't see anything but making that money back. If you come into a casino with $1,000 and you lost 900, the only thing that you're trying to do at that point is make more money. Am I right? You're trying to get more money. You're trying to make more money. You're trying to come back with that $100 and now you're trying to 10x that to make $1,000. Where you have a better chance of coming in 2 days later, 48 hours later, when your mind is refreshed and you don't care about that loss as much, you come in, you turn that 100 into 200. Then, boom, you turn that 200 into 400. Then you have a better chance of doing that. Where if you've already lost 900, do you think that day you care about losing another 100? No, you don't, right? So the idea is you need somebody on top of you when you do struggle, when you do have a hard time, somebody to tell you, fucking stop. Literally simple. Like somebody needs to be harsh on you, right? Literally, like I'll be honest with you, right? So like if people were like learning from me like real time, oh, I would break the keyboard. I'd be like, dude, like if you touch this shit, I'm gonna break it in half. Like I'm it's a joke, but that's how it should be, honestly, because this fucking thing is really stressful. I'll be honest with you. Because the thing is, if I'm stressing about my trades and then you guys are stressing me about your trade, like, and we're in the same room, what's easier for me to replace a $50 keyboard, or is it easier for me to replace your $1,000 loss that you're gonna have because of the mentality? Think about it, right? So you're gonna think smart. But trading is very, very difficult in that kind of a way. It's you versus you. That's it. That's the hardest part of trading. Sport, resistance, triangles, orbs, all of this shit works. I promise you, it works because if it doesn't work, you do the complete opposite and then it works, right? It's not that isn't the problem. Technical analysis is the least biggest thing that you need to worry about. What you need to worry about is you versus you. And how do you make those habits that these pro traders have? How? By following them, by copying what they do every single day. Simple as that. And that's how you become a pro trader. you can't become a pro trader, or you can't do you can't be a marathon runner if you do the complete opposite. You sit there, eat chips every day. You can't be a marathon runner. But if you train with the marathon guy every single day, you're gonna be like him, right? You might be 80% like him, right? And it's kind of the same idea. If it took me 9 years to do this and be like this, even if you're at 80% in a couple of years, guess what, man? You're doing good in life, I promise. And then imagine what you're going to be in 9 years. So simple as that. So we're going to end it here, guys. Everybody, good luck. Hopefully you guys learned a thing or two about swings in this one. I know there was a little bit of errors in the slides, whatever, but it's just how it is, man. Like, it's just my Saturday that I'm taking out to do this. And, everybody has life, and everybody, has kind of, stuff to do. So, it's kind of a little bit rushed, but hopefully you guys kind of learned a thing or two, and definitely sit by yourself, learn about trading a little bit, about your kind of account and how you want to trade and how you want to become a proper trader. So, other than that, good luck, everyone. And let me know if you guys want to unmute also. I know I muted all of you guys too. You guys can unmute, by the way. How was this? Does this help you guys though? If you guys want to jump on?
Oh, this is amazing. Amazing. Period.
All right, man. As long as, a couple of you guys got like good lessons out of it, I hope, it helps.
Definitely. I wanted to say, man, I appreciate you, and I've been with you for some time now. I haven't gotten the mentorship yet, but I'm working my way to it. But man, honestly, and everyone listening, like there ain't no other trader like you. I ain't ever in all the years I've been into trading, the last going on 5 years now, or 4 years now. Or actually, yeah, about to be going on 5. But no other trader, man, no other trader. Like I don't know if you just have to like posting your profits lately because you don't want to like make people.
It gets old, brother. It gets old.
And some people get, they're like, oh man, I'm gonna come in and make that with him. Like it don't work like that. It takes time. But like I'm telling you, I don't know. I ain't never seen no other retail trader like you. So like, you know what I mean? On a real note, like you are one of the greatest, and I'm working my way to that mentorship, and I appreciate everything you do. So thank you so much.
Yes. I appreciate it, man. Thank you. Thank you, guys. And it's literally all love. Like I said, we're trying to build this community, man. And the whole idea of it is everybody becoming a better trader. That's why I want you guys to be active in the chat. Ask us questions, learn with us, right? Ask me when I'm in a trade. Ask Nick when he's in a trade. What is he doing? Why is he doing this? Right? Because all it's going to do is help you guys become better. Simple.
Yeah, that transparency too, you know what I mean? That's what it comes down to, is like there's a lot of traders out here, but not everyone is a good teacher. So you need a good teacher. Yes, you need a mentor, you need a good teacher, and the transparency is what comes in. Like you need transparency, because if there ain't no transparency, there's like nothing to learn from. You know what I mean? He may like I was just saying, he don't post his profits lately, but his profits are like his
crazy, insane.
Insane. He's you know what I mean? There ain't no other retail trader like him, and like shit. But anyways, yeah, I'm gonna get to that level with you one day, man. I'm gonna hit that mentorship one day.
100%.
But transparency, that's where it is.
Manny, can I ask one quick question?
Yes, of course.
Yeah, you said that it's Monique. So you trade on you do options on Wednesday to Friday instead of Mondays. Is it because there's more risk and higher return if you trade options on Wednesdays? I just wanted you to clarify that for me.
Only for the swings. Remember, if you're day trading, you're day trading with the same consistent contract size every day. So for instance, if you're trading Tesla, like Monday through Friday, you're trading the same consistent sizing every day. You're trading 100 contracts, you make $1 on Tesla, right? You make basically, let's say if you're trading 10 contracts, you make $1,000. And then if you lose 1,000, right, you have the 100 contracts. It doesn't matter what the price of the option is. For swings, because you're trading, for instance, if there's $7 options you're buying for swings on Tesla, right? And we can't predict the move for 7 days, but we can probably predict the move for the next day, right? So why would I pay $7 for the same options where I could get a similar move on, let's say, NVIDIA on Friday and have that go much longer way, right? Because Now that same option that was $7 is going to be $1. For instance, let's say on Tesla, let's say we were able to get like a move from Thursday night to Friday, right? When the premiums for Thursday to Monday are basically gone. Now the option is going to open up at $1.80, right? So on Thursday night, let's say if I take a trade for $1.80 and I buy, let's say 10 contracts, right? I've spent $1,800 on that option. And let's say the next day I get like $2 to $3 move. That basically means that 150%, right? Where if I would have taken that same trade on let's say Monday, it'd be $2. Like this same example, right? Like if I would have made $2 on Monday, right, on that same trade, it would have been 30% for the swing, right?
If I held till Friday.
No, not if you held it. Why would you? So the problem is if you hold till Friday, yes. If you know that whole week Tesla is going to move up, then hold. Then this is a better play, right? Because then you might get just a little bit more than what you might get in these 2 days.
Okay.
Right.
All right, cool.
It's
Thank
like
you, Manny.
two different strategies. Like we get a little bit more detailed into it. Like if you were to like sit down and learn the whole strat, like it's simple as kind of like, why would we want to pay $7 and get like a $2.50 move on Tuesday? Because a lot of times, remember, like even on swings, why are we so accurate? Because, well, we don't try to predict the move for a whole week. We try to predict the move for the next day or the day after, right? Just 2 days. And if I pay $7 for an option, and let's say I get like a $7 move in these 2 days, I get 100%, right? Now, let's say if I pay $3 for an option here and I get the move in these 2 days, think about it. If I make $7 on a $3 option, what is that? That's 200% in profit, right? Just because of these days difference, because the premium is much less on these days.
Oh, okay. Okay, thank you.
Right? So your percentage goes a longer way. Your money goes a little bit more longer way on swings.
Okay.
The expansion days, basically. Yeah. I don't know what that means. I have no idea, but I'm guessing that means Wednesday, Thursday, Friday. And,
okay, cool.
and
Thanks,
Wednesday night is usually when we take those trades, right? Sometimes if you'll see, like on Tuesday and Wednesday, we'll take QQQ and SPY. Those don't matter because those are going to be the next day expiry either way, right? Those you could trade Monday, Tuesday, Wednesday. Usually for like NVIDIA, for Tesla, I don't want to pay $7 and get a $7 move the next day and only be up 100%. I'd rather pay $3 on a Thursday night and be up 140% by just getting a $2 move on Tesla. Right? Monday, Wednesday, but same risk. But the risk is more too, because look, if you're losing 50% on a Monday, right? You're losing $3, right? So you're basically making $2.50 and you're risking $3. Where on a Wednesday, if you lose, let's say, 50%, you're risking 70 cents if you're trading the same contract size. But it's not about that. It's about how much money you're putting in, right? It's weird. It's just like the options tend to explode. Just take my word for it. I promise. Like Wednesday, Thursday, Friday, they usually go boom. Like, you know what I mean? Where here it's like they're like slowly moving up or down, and then you have more days, you have more time in order for the option to work for you, which also is a good thing. But a lot of times, because it's market makers and all of that, like now recently it's been actually horrible. They are literally just up. 2 days later, they're down, completely down, and then they're completely up, and it's just like they're killing every side, right? They're not paying anybody. So these days, you should be very careful. So good luck, everyone. Let's all enjoy our weekend, and hopefully you guys enjoyed this. And we'll do more of these, and we'll be doing this every week. So good luck. Let's go make some money.
Thank you again, big bro.
Thank you.
All right, guys.
Thank you, Manny.
Of course.
Thank you.
Thank you.